Well, we at ET now spoke to Manish Gunwani. He's the CIO Equity Investments at Nippon India Mutual Fund to garner a perspective as to what his outlook is in terms of the market. Is cyclicals a good theme? What's the view on tech? First, let's run you through what the outlook is on the Nippon India Mutual Fund. The top sectors in the portfolio include maximum concentration within the financials, close to 25.5% of the total portfolio. There's materials, that's about 12.9%. Industrials, 12.5%, healthcare as well as utilities. The top 5 stocks in the Nippon India Mutual Fund include ICICI Bank with 5.2% exposure, HDFC Bank, SBI at 3.9%, NTPC as well as Infosys. In terms of the recent buys, which are some of the stocks that they've looked at very closely, well, that's NTPC, SAIL, SBI as well as Sun Pharma and even Gland Pharma, that recent listing. And the recent sells include Bharti Airtel, HDFC Bank, Ashok Leyland and Axis Bank. Alright, let's get a move on and tell you a little bit about what Manish Gunwani had to say about the markets. Well, he believes that the markets as of now have been much more resilient than what was expected given the kind of on-ground situation that we're looking at with respect to COVID. He's saying that global growth continues to remain very strong and that we have seen globally at least that vaccination has led to a fall in cases, and that's pretty much echoing what a lot of market experts saying, that that's the expectation back home as well. We've seen this happen in the United States as well as particularly in Israel, which has handled COVID fantastically, and the expectation is that as the vaccine drive picks up, particularly from open for the ages of 18 and above from the 1st of May, that is going to be a bit of a game changer to the overall economic scale, the overall infection rate lowering and dealing in general with the pandemic. Manish Gunwani also believes that as of now, there is consolidation underway across sectors, and this includes banking as well. He's seeing big momentum in certain group companies, in particular in the Tata group of companies. They've continued to be bullish on private banks, and he believes that private banks are going to continue to perform well, and that playing the banking story is a structural way as well, a structural story for the long run. The premium for FMCG products is doing quite well. Premium FMCG products rather are doing well, and global growth related sectors like IT as well are performing strongly. He's positive on commodity stocks, and given the pricing, believes that commodity stocks valuations are cheaper. The electric vehicle shift, according to Manish Gunwani, will be a disruption in the auto sector globally, and he believes for most auto stocks, growth beyond 5 to 10 years is a bit questionable. In the short term, he does see some headwinds for the auto sector due to the lockdowns. When it comes to the metal sector, he doesn't think that steel prices will rise from the current levels, and new listings of some of the new managements with high growth are very interesting.